All right, all right. My people, we are live. We are live. We have an exciting day in front of us. So looking forward for this day. And I think you guys know why. Today's the FOMC meeting. The new interest rates are going to be decided. Coffee first. So we're looking at these red folders here, and this is juicy. So UK just came in with their inflation report, and it was higher than expected. It was much higher than expected. It's crazy. So their inflation is skyrocketing. And later today, so we start at 7 p.m. Swedish time or Central European time. So that will make it about, I think it's 2 p.m. Eastern time, when the FOMC conclusion is reported in the press conference is. So the press conference that is 7:30, which means 2:30 Eastern time, is what we really are looking forward to, because whatever is being said there will shake and maybe break the market. I can say like this. So what's expected is 25 basis points. It was expected 50 basis points, but due to all these due to these problems with the banks, these banks collapsing, this whole bank situation, the bank crisis, we cannot expect 50%, because if Jerome Powell announces 50 basis points interest rates increase, that would break the market. Like you will see everything tank so crazy that you can just short anything and you will make money. But that will also cause maybe for resignation. I don't know, because I think there will be people will go wild against it. Like they will go crazy against it, because the thing is like this: people are already tired of these rate hikes, because it's causing so much problem in the financial situation, not only for companies in the stock markets, but for people's private situations, right? So 50 basis point is basically out of the question now with the situation with the bank crisis. What's expected is instead 25 basis points, but there's a risk that he says zero increase in rate hikes. If that happens, you can expect markets will skyrocket, especially the crypto markets will fly, Bitcoin will fly, because this is, I think, the first time in what can it be, 15 months, 16 months, more, it's way more than 1 year now, that the interest rates are the interest rates increase will get back to zero. So remember that 25 basis points is expected. What does that mean? That means that if he says we will increase the interest rate with 25 basis points, not as much volatility will be in the market. There will still be volatility in the market, but not as much as if he said, for example, 50, or if he says zero. All right. And if he says 50, everything crashes. If he says zero, everything flies. So be ready for that. But I want to give you guys a warning, caution, be cautious of trading during the FOMC meeting and during the FOMC conference, because market will be extremely volatile. Like I'm always saying that it's volatile during these press conferences and when the news comes up, but in this case, it will be extremely volatile, because there's so much fear in the market right now. Banks are scared as shit. The whole financial system is shaking. So everybody's looking now, not only in America, but in Europe, all around the world. Everybody's looking now at this press conference. Everybody wants to know and wants to see what will be said, and yeah, what to make out of it. So keep that in mind. Be very, very cautious trading during that time. You will see extreme volatility in the markets, and it's easy to get shaken out. And I gotta say this, because I know there's a lot of new traders watching this. So I gotta say it. even if you think you have secured yourself with stop losses. So, like, let's say, for example, you are in profit in a trade and it's time for the FOMC meeting. So you put your stop loss into break even. This has happened to me and it has happened to many traders. What can happen is the market moves so fast that it skips your stop loss. And suddenly you see your account blown. Or it's like half the size or something like that. You're in a major loss. So keep that in mind. I would recommend don't not to be in a trade during the meeting. So directly after, like 2 minutes after, you can jump in. That's when you will see all that volatility, all the volume pump in the market. But exactly during the meeting, don't be in the market. That's my recommendation because it's a gamble. Trust me, it's a gamble. If you like to gamble, perfect. Here's your perfect situation to do that. So we have a very interesting Wednesday. Thursday will also be very interesting. We got news for GBP, for UK and Schweiz. And Schweiz news is going to be very interesting because of the Credit Suisse situation. And it will move the euro, of course, very much. And I think it will affect the US dollar a little bit also. So, and then Friday, a lot of news for euro and also for US, the flash manufacturing PMI will be released. So we got interesting 3 days ahead of us, including today. All right. With that said, let's jump into the markets. Let's see what we got here. I'm gonna be honest with you guys. I haven't had time to look into the market so much myself before the stream today and this morning. So we're gonna take it from scratch together. First, recap what happened yesterday. So I call out this Bitcoin trade. We are right now. We smashed take profit 1. We have moved stop loss to break even, and we are right now about 67 pips in profit. I told you guys to take profit. We even smashed take profit 2 because I told you guys perfectly to take profit when price hits 28,470, 50-ish, something like that. I hope everybody that is in the Telegram channel took profits and listened to my call there, because as you guys see, it was perfect. Then market came back down. And I actually think that we will move up a little bit today. I don't know what's going to happen during the news, but until the news, I think we're going to move up. I think we're going to pass take profit 2. But for you guys that haven't cashed in your take profit 2 yet, and wait, my computer is bugging. Yeah, can anybody let me know in the chat that if you hear me loud and clear? Let me know in the chat if you hear me loud and clear. All right, so I'm gonna continue in the meantime. Anyway, so TP3 is what we're looking for today, and TP3 is at 28,980. So that's our level today. Take profit 3 and take profit 4. I don't think it will happen today. If not, the FOMC meeting says something is being said there that is in favor for crypto, and that would basically be, thank you, Rivo, and that would basically be that the interest rates will not be raised. That would be amazing for crypto. Trust me, that I think we can even smash TP4 then easily. So this is what has happened in Bitcoin and with our trade, and this is what we're looking for. So not much more to say there. All positions here should be at break even, so this is a safe trade now. Let's go to gold. Gold also, we had an amazing trade yesterday. And when it comes to gold, let's just recap, and then I'm gonna break it down from beginning. I'm gonna chart. I'm gonna analyze the chart from scratch, because we need to do that. We need to start fresh now because we are at a pivotal point. And what happened yesterday was we took a sell. We took that sell from, what was it? 1967. So it was here. So market were playing around in this area. I call out the sell here, and boom, we cashed in. For those that held it all the way till 1937, that's 300 pips in the bag. So congratulations to y'all. I sold out at 1947, so I made 200 pips on this trade. I think most of us were there, or sold off there, and that's that. So we are grateful and happy for that. Now, with that said, we go zoom out to the bigger time frame, clean this chart up. Even the now we keep the EMA. All right, let's look at gold from scratch. So we're on a daily time frame now, and gold is at a, what can I say, high position, oversold position, but it's actually not, because it's been I can say undersold for a very long time, oversold. So it's in an overbought position. Sorry, pardon me confusing terms. It's in an overbought position technically. Fundamentally, it's not. It will rise much higher because this whole bank situation will place gold perfectly in the hands. And this is something that you got to understand. This whole banking situation, we got this whole crisis going on. We got the US dollar that is risking to basically become trash, get worthless. BRICS nations, the BRICS coalition is growing very fast right now, and it's growing very strong right now, and they are creating their own reserve currency to compete with the US dollar. Now, US dollar won't have a chance against this reserve currency. Why is that? Because the US dollar ain't backed by nothing. It's backed by trust. And right now, the trust is diminishing very fast because due to all the printing, due to the bank crisis, due to all of that stuff. While the BRICS nations currency that they have created is backed by gold, copper, silver, I think uranium. I don't remember all the metals and things it's backed by, but they have some very hard requirements for you to be a member of the BRICS nations and for you to be a member of the BRICS currency. It's not out yet. I don't know when it comes out, but it will definitely shake the US dollar a lot. So, what do I want to say with that? Yeah, so all these countries that want to be a part of the BRICS nations and want to be a part of this reserve currency, this world currency, they need to accumulate gold. They need to have gold because gold speaks in these countries in this coalition. So they are backing up with gold now, and they're selling off US dollar. They're selling off US government bonds, treasury bonds, and all of that stuff. So they used to be very safe, but it's not safe anymore. So countries have realized that, central banks have realized that, and they're selling off. So, and they're buying gold instead. So gold has a lot of climbing to do. It will go up a lot. All right. So where we are right now is actually, I would say, not oversold, but we are low. With that said, let's look technically at the chart and see exactly where we're at. So first thing we do, as always, we always pull Fibonacci from this on this big swing here. This swing is the last big movement, the last big sequence that we had. And when we do that, we see what? We see that we came into the supply zone. This is a major supply zone. We came in there, basically dipped our finger on a bigger time scale, and then boom, started to move down. We have had this whole big rally here with a little drawdown and then up again. The drawdown took support against the 200-day EMA on a weekly time frame, on a daily time frame, sorry. So what's happening now? Well, first of all, you gotta understand one thing. We have these levels. What I'm gonna do now is I'm gonna zoom in a little bit, and I want to give you guys this sequence. So I'm talking about this sequence now. This is the major bullish sequence that we had lately. Let me pull this correctly. And to distinguish these lines, as we always do, let's keep it also striped, but we do thinner lines here. All right, cool. So all right, to be honest with you guys, that sequence doesn't give us nothing because it's already broken. What happened is this. So we had this sequence, came down, retraced, and we tested the 38.2 Fibonacci retracement. That's the line right here, the blue line right here. But that was it. Bank crisis started to kick in, market shot up, started to move up. And with that said, it broke the sequence, it broke the structure, and right now we can't find so much more there. But we have this sequence here, the last pullback. All right. When we're looking at that, what do we see? We see the market came all the way up to the 127.2 Fibonacci extension. Tagged it. You see this? It tagged it perfectly, and now came back down to eat a little bit from this little supply zone, sorry, demand zone that this sequence has created. So we have the big supply zone here, and we have the little demand zone here. And the little demand zone is from this smaller sequence right there. Market is in there now and accumulating. What will happen from here? Personally, what I think, like, listen, this is how it is. Market is very overbought right now, so it should technically retrace. All right, it should hit levels something like this, about 1760. That's what it should do, but nothing is going as it should right now in the markets due to all the black swan events and major fundamental news that comes out all the time, and macroeconomic factors that are shaking the markets. So nothing is as expected. So we cannot expect the usual, the normal. Nothing is normal right now. I personally think that this will happen. You see this sweet spot zone here, this major sweet spot from this big swing that we went through earlier. Market will come back down and play around a little bit in the sweet spot. Pick up supply, liquidity, fill some of these orders because there's a lot of unfilled orders here because market has been running so fast. So it has left a lot of unfilled order behind it. So we'll come back, pick up liquidity, fill some of these orders before, possibly, depending on the FOMC meeting, a new major pump. And I'll tell you this, if gold starts to pump from here, I'll say the buy zone is here. If gold starts to pump and the FOMC meeting, the news there comes out bullish for gold, jump in, get your positions, get your buy positions, but don't over leverage because it can be very volatile. But hold it, not for 50 pips, not for 100 pips, not for 150 pips. I would say, like, I'm expecting a move of at least like 200 pips is what I'm expecting. So that's why I'm saying today is an exciting day because today is money to be made. But it's money to be lost also if you don't know what you're doing and if you're going gambling, FOMOing in because you want to be in the action but you don't know what you're doing. So be very cautious with what you're doing today. With that said, let's see if we can find some correlation with the sweet spot zone that I spoke on here and the absolute last swing, which is this one, of course. This is the last sequence. Yeah, we have correlation. Let's go in the 4-hourly time frame. All right, so you see this thick yellow lines, that's the big sequence that we had, and that's the big sweet spot zone with a lot of liquidity. But from this bottom to this top, that's the absolutely last swing. When we're pulling that Fibonacci, what do we get? We get these lines here. This yellow line and this yellow line. Let me make them striped so we can distinguish them. And as you guys see, it correlates perfectly with the sweet spot. So I would guess that the market will come down and test the bottom of this sweet spot from the last bullish swing that we had, and that is the 61.8 Fibonacci retracement. So I'll think the market will come down. As you guys see on the 4-hourly time frame, it will probably correlate perfectly with the 200-day EMA also. We love that. So it means a lot of support here, strong support at the zone. So I would think that the market will come down and test this zone. So basically 19, 18, let's say 1900 to keep it even. 1900 all the way down to 1880 to keep it even. So 80 to 1900. Let me write it down. I feel like I'm stumbling on my own words. 1880 till 1900. This is where I'm expecting the market to come down to. All right. If that happens, I'm definitely in for a buy, but it's a long-term buy. So like I said, it's not a scalp for short take profits. Of course, we're taking profits along the way, but I'm expecting at least like 200 pip move on this one, at least, if not more. So and when that happens, we will look at the take profits and everything. Stop loss, I can't call it out now because we gotta see how the market moves first. Expect that something like this happens during the FOMC. Market comes down here. If it is down here, then boom, and people get fooled. They think like, oh shit, market is flying up. Let's jump in. Then it does like this. Boom, stops everybody out, and then it flies up. This is very typical in these kind of situations because it's not only us that are watching this and seeing this as a money-making opportunity. The sharks, the whales, institutions, hedge funds, pension funds, central banks, big whales with big wallets, they see this also and they move the markets. So they will try to play people out to get to accumulate as much liquidity as possible so that they can get a good push up and of course get as much profits as possible. Until this happens, because from here, I'm talking like if it's certain, nothing is sure. It's not sure that the market comes down, but but this is my prediction, what I think will happen today. Maybe we start moving up already from here. From here, from where we are right now to that level, that's about 45 pips. So that's also a good trade to catch. So we will see a little bit how the market moves. Maybe we're catching a sell here. I don't think so. Why is that? Why don't I think so? I don't think so because we have this. We are having support against the 38.2 Fibonacci retracement from this last swing. So we are using it as support right now, and it correlates perfectly with these tops as you see here. So this is actually a resistance and support zone. And right now we are above it, so it's more. Right now it's looking more bullish than it's looking bearish. All right, so we gotta be objective and stay to that. On the 4-hourly time frame, we got the 20-day EMA here. So even if we have a buy situation here, we will face a lot of resistance on this 20-day EMA. If we zoom in a little bit, yeah, you see. So right now what's happening is market is trying to break above the 20-day EMA on the hourly time frame. If it does so, if it breaks this one, you're going to see me call out, it's a high chance that you will see me call out a buy in the Telegram channel. If you ain't in the Telegram channel yet, make sure you join it. Link is in the description box. Calling out trades daily. We've been, I think we smashed like 400 pips yesterday. Had an amazing day. And we've been on a roll this whole year basically. So we have resistance here. We need to break that for a possible buy situation. How does it look on the 15-minute time frame? We already broke it. We need to break the 200-day EMA as well. So I don't see an entry into this market until at least 1947. So it's a possible buy here. I don't call this I don't call it a buy here. I say it's a possible buy at 1947. We need to see how the market behaves. I want to see how the market behaves first before we do anything there. All right. So we'll leave it like that right now. I can call out a trade on that. Remember, our philosophy at Prosperous is you're prospering with quality, not quantity. So catching like 20 trades in one day or 10 trades in one day won't make you rich. It will just get you emotionally fucked up. So what you want to do is catch quality trades. Catch a couple of trades, let them run, do their thing, have your analysis and your strategy, your plan perfectly for them, and stick to it. Be disciplined. Stick to that plan. Don't change your plan all the time along the way, because it's easy for emotions to make you want to change your plans, right? To change your strategy along the way. No, stick to it. And if it doesn't work, then you know what didn't work, and you can analyze it, journal it, and tweak your plan, make it better. All right. So this is what we stick to now. We had the major support. If we're going in for a buy, we want to see the 20-day EMA break on the hourly time frame. Until that, nothing happens. If this support breaks, we will see the market come down. Then we're actually going in for a sell. If this support breaks, I'm calling out a sell, but it's a very short sell. It's a scalp sell basically, down to this 50% Fibonacci retracement that you see here. Maybe I will have another take profit here also. Maybe we'll see in the situation, because that is nothing that will happen in the coming minutes. With that said, let's look at Euro USD. Now, Euro USD, disappointed at it. I'm a little bit upset with it. I'm gonna tell you guys why. I posted this chart yesterday in the Telegram channel, calling up this trade. Beautiful trade, right? Massive amounts of pips. This one is 360 pips. Really nice trades. What's up? I can share that. Okay, let me finish Euro USD and I will jump into funded accounts. Good question, True. So, why am I disappointed at Euro USD? Yeah, because let's zoom in a little bit. This happened. I was watching this. I was at the gym. I was watching this, and I was training, but I couldn't focus on the trading because I saw that this was a good trade that was coming up here, and I wanted to call it out in the Telegram channel, and I was preparing it. Then, without any warning, because this was the resistance that you see here. Here was the resistance. I wanted to see it break. When it broke, no warning, no nothing, it just shot up. Like next time I was looking at it, it was up here. I was like, okay, let's wait for the retest. When the retest comes, I call the trade out and let's run it. The retest never came. It only came down here, and then now it's been chopping around here. Today it's pumping a little bit again. So I don't know what to say with this right now. If this is a buy or sell, it's a very sensitive situation with the Euro USD due to the news that's coming out today. I would stay cautious. If you want to go in for a buy on Euro USD, it's either, if the market comes to retest this level, I'm very happy. There's a high probability that you will see a buy signal in the Telegram channel. Why is that? We got the 200-day EMA confluently perfectly with the creating a massive support here, and that's that. And plus, yeah, of course, this is the major support from before that I wanted to see be retested. But if it doesn't happen, if you're looking to be bullish on Euro USD, you need to see these levels here break. This is the resistance right now that the market is facing and is testing. So from here right now, what can happen is that the market comes down and start testing these levels. Then we are looking, of course, for a buy. That would be very nice for us. But we need to see first what happens here. Will we break through or will we get back down? To be honest, I'm hoping for the markets to come down here again and test these levels. That would be juicy for us. So no trade situation there right now either. We got GBP USD. I just wanted to check it quick because we had the CPI readings today on GBP on UK. But as you guys know, I don't trade GBP USD very much. I do it sometimes. Okay, so what I can say quickly, just if you guys want to have a quick analysis on this, is we are at a very important level here. That's something I see directly, and it's these levels here that I'm talking about. This is the resistance that needs to be broken. This is the support that needs to hold. This here, I'll call it a no trade zone. This is market is basically ranging inside here, or will range inside here probably. So what you want to see is this: retest, breakthrough, retest, or breakthrough, retest, something like that. All right. Now, let's talk about funded accounts. Good question. First coffee, because this is important. Let's talk about funded accounts. So, I know a lot of people that are in my Telegram channel and that are on these streams have funded accounts. I have funded account myself. I trade funded accounts. When you're trading funded accounts, first and foremost, you got to understand what it is and what you're doing. Most prop firms, if you don't know what a prop firm is the firm, it's a funded account. It's the firm that offers a funded account. Most prop firms, I would say basically all of them, their funded programs that they have is designed for you to fail. Understand that. If you pass all the loopholes and all the requirements that they have, it's like basically you pass the test. Now we can give you money, real money to trade with, but they also, you got to be very careful, because I've experienced people, it hasn't happened to me, but I know people that has passed the whole challenge. They get the live account, they make profits, they want to withdraw the profits, boom, denied. Why? Because they breached some rule, and like basically you cannot set a trade without having stop loss, or you cannot trade over the weekend or certain times, or you cannot trade during news. Like these prop firms, you got to read the rules properly. It's very important, because they have all these loopholes that you got to run through, that you got to jump through. So make sure you understand the rules, you don't breach them, so it doesn't happen to you that you come to a live account, you want to do your withdrawal and they deny it because you have breached the rule. So that's number one. Number two, when you trade your funded account, always, let's say, to keep it simple, let's say it's a 10K account, to have some simple numbers. Let's say it's a 10K account. The rules are you can lose your maximum drawback is 5% a day and 10% in total. Let's say that's the rules. That means you can have a drawback of $500 on your 10K account in one day maximum, and you can have maximum 1K drawback totally. All right. When you trade that account, don't see that you have $10,000 to trade with. See that you have $1,000 to trade with. You can do a maximum drawback of $1,000. That means you only have a $1,000 account to trade with. So your lot size should be accordingly to how much you can lose in that challenge. I'm gonna write it down to make it a little bit simpler. We have a 10K account, 10K funded account. Maximum 10% total drawdown. That equals $1,000. All right. Now, normally when you trade $1,000, a $1,000 account, a 1K account, you have a lot size at around 0.1. All right. So my recommended lot size is always for people is to, if you have a $100 account, it's basically 0.01. If you have a 1K account, then it's 0.1. That's your lot size per pip. So here, what do? You use lot size 0.1. You see this as a $1,000 account, not as a 10K account. Why is that? This is because if you see it as a 10K account, and you start risking as a 10K account when trading it, you will, if you have like 2-3 losses, you will blow the account, because you will now suddenly use lot size 1. Lot size 1 is $10 per pip. And yo, if the market moves 50 pips, you're done. That's your 500%. That's your your $500 that you can risk in one day. That's your 5% in one day. You're out for that day. Do it one more time, you're out totally from the challenge. And the thing is, you can gamble and be like, okay, shit, let me gamble, and if it doesn't hold, I make a new account. Like, that is a strategy that you can use. I don't recommend that strategy. Better, if you want to do that, think it through properly. I've used that several times, but I know what I'm doing. I've had several funded accounts. I've blown up several funded accounts. I have multiple withdrawals. So like, I've been through all of that, this whole process. And every time I'm getting a funded account, I'm already starting at the new one. So when I get a live account, I'm starting at a new challenge. That's also very good for you to remember. So, but back to this, sorry, I sidetracked. So you can lose 10%, that is equivalent to $1,000 on your 10K account. So you are trading with a 0.1 lot size when you're trading this. And don't be eager to like pass the challenge quick. You see some people pass it in 2 days, maybe 24 hours, maybe 1 week. Do your own race. Do your own race, because in the long term, like, you can gamble, you place one winning trade, boom, and you pass the challenge. The problem is you will come in with the same mentality to your live account, boom, you violate it, you breach the rules, you back down, starting from scratch again. And the problem with that is this is what I wanted to say. So you think that, okay, it's cool, I just buy a new account. But the problem is, for every time you buy a new account, psychologically, you're taking a loss, and you lose your confidence in what you're doing. You get more and more emotional, and you absolutely don't want to be emotional when you trade anything, and especially not a funded account. You gotta be, I want to say ice cold, but it got to be money that you don't care about, okay? So this is what I'm saying. Use 0.1 lot size, create it safe, build it up slowly but surely. This is how I'm doing it. I've passed it several times in like 3-4 days. And that is that. Then, when you get your live account, this is what you do now. When you get your live account, when you pass your challenge, you get your live account. It depends on what prop firm you use, because they have different challenges. I'm using Funded Trader Plus. Why do I use them? Because they have a rapid challenge that I use, the expert challenge, or the experience challenge, I think it's called. And that means I only have to do one phase, and that one phase, when it's passed, it's no time limit. So as soon as I pass it, I get a live account. This is why I'm using them. But they have very strict rules. So I can only have a 3% daily drawdown, and I can only have a 6% total drawdown. Keep that in mind. Very important. So I gotta have a very tight risk management when I trade an account. Now I'm confident in my own trading. I'm confident in my scaling of the account, slowly but surely, like I mentioned. So I know I can handle it, but I know that everybody can't handle it. So understand what you're doing. Now, when you pass your challenge, you come into the live account. Now you're trading live money. This is when nerves easily can start to kick in. First time I got my live account, I had a 50K funded account. I passed the challenges. I got the live account. I came into plus, and I got fucking overconfident, and I blew the account in The matter of 3 days, scalping. Boom, 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 boom. I blew it. This was the first time I did it. And what did happen? Because I started to get overconfident just from the challenge itself, because I was basically winning every trade I was taking. I passed the challenge. I got my live account. I got one win, I think, in with my live account. So I was in plus, and I was like, let's scale it up and let's get out money. And this was important also. I needed money, so I started to get emotional. So I wanted to get out the money quick. The money came out quick, but in the wrong side. I lost the whole account. So my strategy, but I have had several successful live accounts. So my strategy when I have live accounts is I first build up a buffer, build up a margin. So let's get back to the 10K account. Let's say we pass the challenges. We have a funded 10K account. It's live. What do? My strategy is build it up 1%. 1% at a time. 1%, what is that? $100. So first day, your goal is to try to build it up to 1%. Not in one trade. Try to build it up in several trades. Why you want to do that? Because you want to create a margin. So you want to come to the winning, to the plus side, and have a margin of at least 3-4%. So you have some room to play with. So you're not like backed against the wall with a gun against your head or a knife against your throat, you know, when you're trading, because that's when you become emotional, and that's when you start to trade wrong. So you want to create that margin so you are not emotional anymore, so you can trade calmly, peacefully, do proper trades, and look at your funded live account as a long-term thing. Your challenge, you can, if you want to, you can look at it as a short-term thing. You buy one, you blow it up, you buy next one. But as soon as you have the live account, look at it as a long-term thing. This is gonna be your work, your income now. You get signals, focus on them, make sure you stay alert on them, know what signals you're taking. Don't go in and risk your own trades if you don't know what you're doing. If you haven't traded more than 6, 7, 8 months, don't go in and do your own trades. You don't have that experience to handle it, especially not as the market is right now. Understand that. So look at it in long-term perspective. Treat it with respect. Treat your money with respect. It will show you respect back. You will accumulate your account. You will grow it. Suddenly, your 10K account is an 11K account. You have made 10% in profits. You will do in your first withdrawal. When you do that first withdrawal, something magic happens, because you have only seen numbers on a screen all the time. Suddenly, the money becomes real. You're like, shit, I have 1K that I made in profit. Okay, they will take their cut. The prop firm will take their cut. So let's say it's 20% that they take. So from the 1K that you made in profits, you keep in $800. Boom! Suddenly you made $800. You have it out. You can use it. Buy something nice for you. And I'm saying that treat yourself. Something. It can be something cheap. Go and eat a nice dinner with your girl or your date or whatever. I don't know what. Buy yourself some new shoes, sneakers, something, so that you feel that reward. All right. So that you feel that reward, and you be like, shit. Mentally, this was super nice. Accumulated slowly but surely, built up my account till I was 10% in profit. I withdrew that profit, and I'm enjoying that profit, guys. That is when something magic happens. That's when you start to really believe in trading, and you start to become very cautious of your risk management, because you want to do that again. You want to do that again, and you know that you deserved it because you stick to the rules, you stick to your strategy, you played it safe, you played it good, you had proper risk management, and that was it. So it became a little trading here on funded accounts. I hope you guys got some value out of that, and I hope that was what you needed to hear. I see the viewers are still on, so that's when I know at least there's some kind of value in what I'm saying. Any more questions on funded accounts while I'm talking on that? In the meantime, I can tell you this: we have. It looks like Euro USD wants to. No, this is GBP USD. It looks like GBP USD wants to break this tops here. It looks like we might come in for a buy here. Actually, guys, we might have a very nice buy situation here. Because if it breaks this, then I think we'll move up a lot. Thanks, bro. Helped a lot. Do you got any recommendation on what prop firm to go with? Funded Trader Plus. I'm using Funded Trader Plus. I'm using Funded Trader Plus and I'm using the Funded Trader program. Now I'm gonna tell you the difference between these two and why I use these two. I use these two because the challenges are quick. So Funded Trader Plus, I only have to pass one phase. You can have, let's look at it. I'm talking about, let's look at it. Funded Trader Plus, boom. Okay, so here's the different programs that they have. I'm using the experience program, trader program. Don't use their, I think it's the master trader program, right? Yeah, exactly, the master trader program. Don't use this one. This is basically, this is how you lose money. People think that, oh shit, I can't get a funded account quick. No, bro, you are basically losing money when you do this. It's you paying the same amount of money that you are allowed to have in drawdown, and then when you have payouts, you gotta pay a percentage of that. Guys, it's you're losing money. You gotta see the mathematics in this. The experience trader program is what I see to be the most valuable in this one. But you gotta understand what you're doing here. So why is this one good? This one is good because it's a single phase, evaluation phase, one single phase. No time limit, trading days, none. And this means I have to pass the first challenge. When that is passed, I'm good. I get a live account immediately. As soon as the KYC is passed and everything, all right? Now, these are the rules. The profit splitting is I keep 80%, they take 20%. I get my feedback as soon as I have passed the challenge and made 10% in profits. This is the requirements, all right? Now, why is this one? Why doesn't everybody take this one just because it's so good? No, this is the problem. Not a problem, but this is the tough requirements. You can only have 6% in total drawdown, all right? And you can only have 3% in daily drawdown. So when you do this challenge, you really got to know what you're doing. You got to have some proper risk management, all right? Second thing is that you are these accounts are a little bit more expensive. So let's say, like for example, $250 on the Funded Trader Plus. Now on the Funded Trader program, you get a 50K account, and here you only for $200 you only get a 25K account. So this one is more expensive, but still though, for me this one is more worth it. In the Funded Trader program, you have to do 2 phases. Also, no time limit, but when you pass the first phase, you have to do the second phase also with a little bit rest of requirements. You don't have to make 10% on the second phase. I think it's 5 or 6%. Then you're done. Then you get into live accounts. You have a little bit more playroom. I think it's 8% drawdown, 4% daily drawdown. So Funded Trader program is one option. Funded Trading Plus is another option, and it's what I'm using now. So guys, evaluate it and see what's best suited for you. If you're an aggressive trader and you know that, like when you're trading, you got to be honest with yourself. You got to understand, you got to know yourself as a person and as a trader. Otherwise, you will never be profitable. You got to understand your own personal characteristics. So if you know that you are an aggressive trader, you like action, you love volatility, you want to see quick moves, you want to see big moves, this is not the right one for you, because this drawdown will have you breaching, will make him do a hard breach in no time, and you will lose the account. All right, so that is that. Back to the charts. Let's see what's going on with GBP. Oh no, I didn't break it, it reversed. So we were looking for a breakout here, but it looks like you want to reverse down. Let's zoom in a little bit. So look, this is what happened. Market was trying to break through this resistance, didn't manage though. So it's testing back down. Remember what I said, this is the no trade zone. This is a zone that market maybe will range in between. So we trading only if we retest, if we break through and retest up, or break through and retest down. All right, that's for GBP USD. Euro USD, let's look what's going on here. Yeah, we're trying to break this resistance here as well. So if we break that resistance, we might have a trade. I'm not sure, to be honest with you guys. It's a nice setup, but I'm not sure if I'm jumping into this one. As I said, I'm reminding again because I see new viewers just jumped in. FOMC meeting today, major news out today, crazy moves in the markets today. You will see like major volatility. It's expected 0.25 25 basis points increase of the interest rates. If we see above that, you see the whole market tank. You will see everything crash, and if you see below that, you will see everything fly. If you see 25 basis points, then basically it's what expected, but still low. I think there will be a lot of volatility. It depends a lot on also what Jerome Powell says in the press conference. Does he sound hawkish or does he sound dovish? Does it sound like we have reached a pivot point in this rate hiking, or we will still continue to conduct rate hikes? So that's for Euro USD. Gold, nothing has happened here. We are bouncing off the support, and Bitcoin is same thing. Guys, the markets are very chill today, and it's because everybody's waiting for the FOMC meeting. So with that said, guys, this became a funded trading account training. Shit, man, my English be super on fleek. So this became our funded traded account training today, and we don't see any trades right now. And this is what we can expect for the market step to be today. Is we can expect that not much will happen until the FOMC meeting, because everybody's just sitting like this now and waiting for what will Jerome Powell say. All right. So with that said, guys, I got to jump into and start smashing these days. I got work to do. I hope you got value out of this. Wish you guys a blessed day. Trade safe, stay prosperous, and I'll see you guys in the Telegram channel.